morning, treasurers. This is your host Parthesh Shah from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 27th January 2022. In the international market, US Fed FOMC and press conference concluded, and here are the highlights. 25 basis points rate hike coming soon. Expectation by March 2022. Inflation will not decline back towards its pre-pandemic levels, and the rise in prices could accelerate. Before the conference started, US 10-year was holding high, reaching 170 intraday. Finally, US 10-year concluded and closed at 185, 7 basis higher from previous high, and 30-year at 216, 4 basis points higher from previous close on Wednesday. Expectation, rate hike cycle with 25 basis points for 6 to 8 quarters, amounting to 150 to 200 basis points increase in interest rates. In the crude oil market, crude is trading at $89.32 per barrel. Short-term range is 86 to 90. Watch out, Russia-Ukraine geopolitical tension. If the conflict worsens, we are going to see much higher crude oil prices north of $120 per barrel in the next quarter. In the currency market, dollar index or DXY is 96.60 on the back of expectation of rate hike. DXY's today's range seems to be 96.10 to 96.85. USD CNY or Chinese Yuan is at 634. USD INR with a low of 74.80 closed at 74.76 near day's low. Support at 74.90 and resistance at 75.30 does exist. Watch out! FII onslaught for Indian equities will continue. On the back of expected US rate hikes, dollar index has formed and reached 96.60. Remember, for the last 2 weeks we have been vocal about rupee weakness. It's further going to weaken. Today, rupee should break 75 mark and wait for next clues in the union budget. For all those clients who were short on rupee for a long time, can square off their positions now as union budget uncertainty is still pending. Structurally, we are firm that USD INR is reaching $76 rupees per dollar very soon. In the domestic market, US Fed meeting has made 2 points very clear. Number one, rate cycle is reversing, and we are going to see rates rising very soon, most likely by March 2022 next FOMC meeting. And number two, inflation will stay elevated and will not be back to pre-pandemic levels versus transitory expectation previously. All the other nations except China are bracing for this reality, and India is no exception. Recent 20 days yield increase is a testimony that rate hikes are certain for India as well, and yield curve is well prepared for the same. On Tuesday, traders shorted Indian 10-year as the new 654 2032 auction will happen on Friday. So they are selling 610 2031 to make a room and to accommodate a new benchmark. Just to recap, 654 GS 2032 is the only benchmark which was devolved on the first issuance day, and now the bond yields are at 666, which is uncomfortable number for RBI. 563 2026 closed at 592 versus 594. 610 2031 closed at 666 versus 665. 667 2035 closed at 710 versus 711. Trading strategy: let the market stabilize today, and then we will see if there is a trading opportunity arises. As you all know, we have stopped active trading for the last 2-3 months as we were quite sure that the trading would not make money. Rather, we are more bullish on the credit risk bearing non-SLR investments rather than duration risk bearing gilts. Our newly set up non-SLR team will help you generate risk adjusted returns for the non-SLR appetite. Strategic call 574 2026 was recommended at 606 or near 98.65, and we advise to hold. This position is again positive, but the entry is done right, and hence we advise to hold the position. Trading range 610 2031 will be from 660 to 665. Next support at 665. Market is already at 665 and now looking fearful. Don't be adventurous. Let this event risk pass, and we will decide on the next positions. That's it for today. See you tomorrow with the new podcast from Night Snippets. Jai Hind.